Humbrecht with Humbrecht Law here, criminal and traffic defense attorney in Manassas, Virginia. If you are new to this page, I am here with Cortney Heykoop, who is the owner of Clover Leaf Wealth Strategies and the primary advisor. Today, we're going to be talking to you about how traffic and criminal convictions can affect life insurance. So Cortney is going to tell you a little bit about herself and her experience and why it is that everybody needs life insurance before we start getting into the discussion. So Cortney, you want to take it away?
Sure. Thanks, Jean. Good morning, all. Like Jean said, I'm Cortney Heykoop. I'm the owner of Clover Leaf Wealth Strategies. We're a financial advisory firm in Leesburg, but we service all of the DMV. And I have been in this industry, let's just say over 20 years, so we don't date me too much. But I've been in finance and insurance, specifically the life insurance side of things, not your property and casualty, for over 20 years. And I've really been I started off in the banking industry, so I have a pretty wide breadth of knowledge when it comes to the financial services market. So I've helped people with everything from lending to investing to their insurance. Does that sound good?
Also, you talk about this experience that you have in the financial industry. So can you tell us a little bit how life insurance and other things that people might think about in the financial industry might go together, investments or retirement or anything like that?
Sure. So, specifically, we were talking about life insurance today, right? So when you're building your financial house, your savings account, your emergency fund is the first building blocks of your house. The second is your insurance, and there you're talking about your disability, you're talking about life insurance, you're talking about health insurance, your property and casualty, homeowners insurance, all of those types of things. And that is really the foundation that the rest of your financial plan is built on. And life insurance is a very key building block in that whole matter. Specifically, it has really changed in importance over the last 5 years as the ways in which we use life insurance changes. So it's become even incredibly more important. And all of your insurance really, it is needed in that foundation, because if you take a piece of that out, everything above it is more precarious.
Okay. So can you tell people who may be watching the why it's so important that they have life insurance, and maybe explain, at different stages of somebody's life, why it's important?
Sure. So it really comes down to what you're using the insurance for. And every person is in history and plan is a little different. The primary reasons that you start off with in life insurance is a replacement of income. Maybe you are starting out in your career, you're getting married, you're having your first child, making sure that your income will be there while you have a child at home, so that your family members maintain the same quality of life, the same living standards as they have right now. As you get older and as you go through different stages of life, what you need life insurance for changes. You might have a goal of replacing your income until your children are in college or until you reach retirement, so that you make sure that your spouse, their retirement plan is not derailed if something happens to you prior to retirement. So as you age, your need for insurance changes. It goes from replacing your income to using it for other things. And that is really where a lot of my specialty comes in line. So we all think of term insurance as replacing that income. It's a cheap policy. You can get it online. You can get it through an agent. I always recommend an agent, not an online source. You pay the same whether you go through an agent or not, because you get the guidance with it. But the The second stage of that is what's really important. And that's the other things that you can use your life insurance for. And some of those are newer, and a lot of people don't even realize they can do that with their life insurance. And that's really where an advisor like myself really adds value. So as your children are off to school, you no longer need a couple $1,000,000 of income replacement. You can look at converting that policy, making it a permanent policy, a smaller policy that will possibly pay for long-term care costs for you if you become ill or go into a nursing home. Maybe it is a way of creating a tax-free source of income in retirement. Maybe it is a way of creating a buffer asset so that you don't have to draw out of your 401k in times like the last few months when the market has been down. There are so many different ways in which you can utilize life insurance in your financial plan. So having an advisor that can kind of walk you through those, keep track of those dates, tell you, okay, now it's time to start thinking about converting your policy. Let's look at these different options. It is important to have.
Okay. So life insurance is something that people need in addition to a will, correct?
Yes. So a will simply states where your assets go when you pass, right? As a lawyer, you're probably more well versed in that than I am. Your life insurance actually avoids probate. It does not go through the will process as long as you have a beneficiary named. That money goes directly to the beneficiary you have named on that policy. It goes quickly. Usually it's within 2 weeks of of the unfortunate death of the event that your beneficiaries receive that check. Another like plus to it is it usually goes income tax free to your heirs. And when you have life insurance, a lot of times the funeral homes and places like that will wait for you to that payment before they expect their payment because they know that there's a policy there that's going to pay out those funds. So having it for burial costs, having it for a way to make sure money goes to a specific person. It also can't be it cannot be contested quite the same way a will can. It lists a beneficiary. It's a signed contract. There would have to be some pretty extenuating circumstances to have that contested.
Now, you mentioned the word beneficiary a couple times. Can you explain what that means, and can you have more than one beneficiary on a life insurance policy?
You sure can. So your beneficiary is, you have a primary beneficiary, a contingent beneficiary. You can even list a third person in place if you want. So for example, you want to leave the money to your wife, and if your wife is gone, you want to leave it to your kids. So your wife would be your primary beneficiary. Your kids would be the secondary beneficiaries. You can have as many people listed as the beneficiary as you like, as long as it adds up to 100%. You break it down based off of percentages. And you can list contingent beneficiaries and third place as well.
Okay. So can you update your life insurance policy if maybe the person that you were going to give it to is no longer around, or if there are just changes that you want to make to the beneficiaries, can you update that later?
At any time.
Okay.
Yep. You just sign a change my beneficiary form and you send it in and you are set to go.
Okay. Is there anything that you've found based on your experience that people don't think about when they're applying for life insurance, like issues that they could have with the policy?
You know what? Before I answer that question, one thing I want to add about the beneficiaries is naming minor children. if you are naming a child as your beneficiary, you have to name a custodian, because if you do not name a custodian for that child, the child cannot take control of those assets. So then it does end up in the court system for someone to appoint that. So it is very important to make sure that you have named a custodian there.
Okay, well, that's something important to know. Yeah.
Yeah. So it just came to me there at the end. So your question was, what is important to know as you're going into applying for life insurance?
Mm-hmm.
Yeah. Okay. So a couple things is, working with an advisor who can tell you exactly how much you want, how much you need. Some people come and they give us a number of 8 million, and really they only need 2 million, or they say I need 1 million and 1 million is not nearly enough. So working with someone who can calculate how much insurance you need is important. Also, having that discussion of what you need the insurance to do now and what you need it to do in the future, so that you get the correct policy that aligns with those goals. Sometimes the cheapest policy is the best, sometimes it's not. So you want to be able to, look into the nuts and bolts of each of those policies and know which company is going to match with you and what you need.
Okay. That actually reminded me of something I thought about a couple minutes ago. Do you have to pay into your life insurance policy or pay premiums for a certain amount of time before they will pay out?
No.
Okay.
So once your policy is in force, whether you've paid 1 year, you've paid 1 month, you've paid 100 months or 100 years, your policy is in force. So if you pass away after you've submitted one payment, it pays out.
Okay.
Also, a lot of times, depending upon the situation, your coverage can kick in when you put in your application. They will give temporary coverage for the first 120 days while the application is being processed.
Oh, okay.
So it just depends on if that's what you want to do or not.
Okay. So do different companies have like different levels of coverage and cost of premiums like car insurance companies do?
Yes. And every company kind of has their niche. So depending upon your age, your gender, the amount that you need, each company does better at certain markets, right? So what I do for my clients is I shop them. I'm an independent agent, so I'm not tied to one agency or one insurance company. So I can go out and see what all the different companies are offering, rate them by the strength of the company, look at the different options that they have associated with their policies, as well as their price, and be able to, give my clients the best recommendation based off of the best bang for their buck. But yeah, each company is slightly better. Some do better with amounts that are under 3 million. Some are priced really well for 3 to 5 million, and some do very well at the $5 to $10 million mark. Each company has their niche, kind of what they're comfortable with and where they perform the best.
Okay. Before I get into the next section, I just want to say to anybody that's watching, feel free to type comments into the comment section if you want us to answer a particular question. Your question might get answered as we go, but I've got my eye on it. So if I don't get to it, I'll definitely get to it at the end, whether the question's for me or Cortney. So Cortney, the next thing that I wanted to get to is for those of us who might not know a lot about life insurance, what is it that life insurance companies look for when somebody applies? Is there something that could completely prevent somebody from getting coverage, or does it just, they might have to pay more money for a policy?
So insurance is really just a transferring of risk, right? You're transferring the risk that you're going to pass away sooner to the insurance company, right?
Mm-hmm.
You're paying a premium for doing that. So depending upon the amount of risk is going to be the amount of premium, right? There's a risk reward trade-off. So if you have underlying health issues, or you have socioeconomic issues that would impact your mortality. Those types of things are going to increase your premium. So when an insurance company, and all the companies are pretty standard in what they look like, they all look at the same general things. How they react to things may be different, but they all look at the same general things. They're going to look at your age and your gender. Women live longer, whether you want to say we drive men to an early grave or we're a stronger species, it doesn't matter, right? Women, statistically, we live longer. So your age and your gender go into that. Your medical record, if you have any underlying health conditions, also what your height and weight is, are important. Your what you do for a living to a degree. There's questions in there about, do you fly planes? It asks about your hobbies. Do you hang glide? Do you rock climb? Do you race motorcycles? Those types of things are going to impact your premium and your ability to get insurance. Also, it's going to look at travel. I unfortunately had a client declined from travel because she was going home to visit her mom in Iran. And Iran is one of the states or countries that are listed as no-goes from the State Department. So that kind of thing can tie in there. They pull your DMV records. So do you have speeding tickets? Do you have reckless driving? They look at criminal background. If you have a felony, if you were convicted, or you on parole, all of those things impact your underwriting ability as well. So yes, there's a lot that goes into that.
So before we get into specific questions about traffic and criminal, are there bright line rules where some people just will not get insurance, or they will not get a good rate? Or does the insurance company look at everything as a big picture? Like they'll look at your motor vehicle record, and then, balance out your medical record. I mean, is everything considered as a whole?
It's everything considered as a whole, yes.
Okay.
Now, there are certain things that, companies will just flat out say no on. Certain underlying medical conditions. If you have HIV or AIDS, actually historically was a no-go, but with new advances in medical technology, there are some companies that will underwrite depending upon this situation. Cancer doesn't immediately kick you out. If you are 2 years post-diagnosis and you are doing well and you are in remission, we can get you insured. If you are 5 years out and you've had a complete bill of health for 5 years, we can probably get you a pretty decent rate. Now, if you have MS or Lou Gehrig's disease, there are other ones that are going to be looked at more stringently, yes. But it is an overall picture. Usually, when I know that there is an underlying condition, a lot of times what I'll do is I will do a pre-questionnaire before we put in an application, where we'll gather that information, whether it's social, economic, or it's medical history, and we'll shop that out to the different companies to see which company has a more favorable rating based off of that medical history or that data that we've given. And then that way we know kind of where to pinpoint the application towards.
Okay. That actually leads me to another question. So if you apply through one company, and for some reason you think you're going to get approved, but for some reason you're either denied or you don't have the coverage at the price you want, can you keep applying to different companies?
Yes. Yes.
Okay.
So, for example, the brokerage house, the wholesaler that I go through, we can move the file from one company to the other. Now, when you do that, it's not always convenient for the client, which is why I said I shop that medical information ahead of time so I know where we want to apply or where we're going to have the best results. Because if we switch, we can transfer all the data that they've collected, but we still have to put in a new application, right? So then the client has to usually electronically re-sign an application, but it's just not as convenient to just keep picking different companies and applying. So that's why I take the time on the front end to kind of say, okay, this is the client's medical history. This is, their data. Dates of surgery, dates of diagnosis, all that kind of stuff. It's a pretty in-length questionnaire. And then that way we know, okay, these are the two companies that came back with the best preliminary offer, so we can gauge it that way.
Okay. I did want to ask specifically about criminal and traffic offenses, which is the whole topic of our presentation. First of all, with traffic offenses, you said they look at the motor vehicle record. I actually have several questions about this. Is it the DMV points that are a problem? Is it the number of convictions? Is it the type of conviction? Does the length of time between convictions matter? What is it that the insurance company looks at when we talk about motor vehicle record?
All of the above.
Okay.
Okay. So typically on motor vehicle violations, most companies ask for 5 years. Okay. In the last 5 years, have you had 3 or more moving violations? Okay. So we're not talking traffic tickets. We're not, parking tickets. We're talking about, your traffic violations, reckless driving, speeding, things like that. And they usually go back 5 years. So I always advise my clients, make sure you're listening to how I'm asking the questions, right? If it's been 6 years, if it's been 7 years, you can answer no. I just need to know 5 years. And that's what they pull when they go to the DMV is the 5 years, right? And they do the same thing, by the way, with your health questions. They'll say in the last 5 years, or they might say, have you ever? So you want to always be careful about what the question is so that you're answering it appropriately, right? But yes, they're going to look at, okay, did you have one in the first year and one in the third year? Are you like pretty consistent? You get one every 6 months. Is it reckless driving? Is it speeding? Is it failure to obey a sign? They're going to look at exactly what the ticket is. They're going to look at how frequent they are. They're going to look at, how, what the likelihood is that type of behavior is going to continue. And if it continued, how does that affect your mortality table, right? Because for them, we're transferring the risk to them. So if you are a reckless driver or you're a speed demon, that's going to increase your risk, right? So then they're going to, of course, increase your premium.
So if I understand you correctly, a bunch of speeding tickets, I guess I should ask the question. A bunch of speeding tickets could completely prevent you from getting life insurance, or you're just going to have to pay more?
They'll probably have you pay more for speeding tickets. Yeah.
Because they look at you as engaging in risky behavior.
Correct.
Okay. Correct. Even speeding tickets, something that's a traffic infraction and not a crime, they look at that as something that could lead to an earlier death.
Speeding it's something that's going to increase your chance of accidents. It increases your risk. It shows that you take a little bit greater risk, right? With how you drive. So speeding is really what they're going to be looking at there. Failure to obey a sign could mean that you drove the wrong way in a parking lot, so they look at what is the ticket for, right?
Okay. So I would assume that reckless driving would be worse for life insurance purposes than speeding.
Yes. Reckless driving would definitely, and that's a misdemeanor as well. Correct me if I'm wrong there.
It is. I mostly have been asking Cortney questions, but I should probably say that if anyone that doesn't know, reckless driving in Virginia is a class 1 misdemeanor. So if you're driving more than 20 miles per hour over the limit or more than 80 miles per hour, regardless of the speed limit, you could be charged with reckless driving, and that is a crime. So
Right.
it sounds like for life insurance, that's going to affect it more than a speeding ticket.
Correct.
Okay.
Now, having that, some companies may just completely deny you. Okay, we have a bunch of speeding tickets and a reckless driving. We're going to deny. Others may just make you pay more. So, like when you had said before, is there just like kind of a line in the sand? Each company has their own kind of lines in the sand, right? So you want to find the company that's best going to work with you and best work with the amount of risk they take. Some companies don't take very much risk at all, where other companies will take clients at a little greater risk.
Okay. Let's say, for example, that somebody is, I don't know what the age would be, but at a young, I assume the younger you are, the better policy or lower the premium would be, just in general. So let's say you have a young person that doesn't have any medical issues at all. Everything else is fine for the insurance purposes, but they have a bad driving record. Could that prevent them from
They're probably going to pay a slightly higher premium, yes, because the company's going to feel that they're a little bit riskier, right? There's a greater chance that they could do something that would cause a car accident where they could pass. So yes, that would impact them. Or maybe they're younger and they go hang gliding every weekend, or they rock climb, or drag race, anything like that, that is going to increase their potential for a life-threatening event.
Okay. All right. So I wanted to ask next about criminal convictions. We already talked about reckless driving, but there are a lot of offenses that are considered traffic and criminal, for example, DUI. I guess we'll start with that because I'm curious to know if life insurance companies look more at crimes that also involve driving a vehicle differently than they look at other crimes. So can you tell us anything about that?
So when you do an application, most companies will ask, have you ever been convicted of a felony? Okay. Misdemeanors are usually in the last 5 years.
Okay.
But some companies will say a misdemeanor or felony not involving driving. Okay, so they will specify that. If you have convicted a felony, you're definitely at a higher risk, right? In their eyes. So you will pay higher. There may be, depending upon the felony, you may not be insurable. But that is a question on most applications that say, have you ever? They're not looking at a specific time frame, but they do differentiate those driving ones. They will say, it'll say in parentheses, with the exception of moving violations or motor vehicle violations. So if they're looking for a misdemeanor or a felony, they're kind of putting that reckless driving in that speeding category versus in the felony and misdemeanor category. Does that make sense?
It does. You said there are some felonies that can make somebody completely uninsurable. Is there an example, or do all the different companies have different, guidelines with the type of felony?
They're all going to be slightly different, but
Okay.
if you are convicted of felony and you're still in jail, I'm going to be very hard to find you a policy, maybe something that's a guaranteed issue that's a minimal amount of dollars. But it's going to be very hard to place that client. Now, similar to, distance from a medical event, how I said, if you're 2 years from a diagnosis, if you're 5 years from a diagnosis, it kind of works the same way. If you are 5 years, if you're on parole, I can get you a life insurance policy. You're going to be paying higher. But if you're 5 years, 10 years from the end of your parole, it's going to go down. Even just coming off parole, it's going to go down. So one thing that I didn't address is that I always recommend people to get the insurance while they can, right? Get what you can and how much you pay for it. So if I have somebody who's come to me and they're, getting close to the end of parole, they have just a couple of years left, but they have a family and they have kids and they want to protect their family. Let's get you what we can and what fits your budget now. When we've hit that mark, we can do a couple of things. Once you're past parole or you're 5 years out from parole, we can either reapply to get you a greater rate, a greater amount of insurance, or we can re-rate your policy where we go back to the insurance company and say, hey, there's been a change. Can you re-underwrite this client and potentially decrease his or her rate? And they will do that as well. So you don't have to completely reapply or restart over, but they will look at decreasing your rate, whether it's being 5 years out from cancer or 5 years out from parole.
Okay. Are there some crimes that do insurance companies look at certain types of crimes different than others? Like, for example, a theft offense, I'm just making this up, a theft offense might be viewed as less risky than, a felony DUI. Do the companies look at crime? Okay.
I mean, they're still going to rate it because it's still a risky behavior. But yes, they're going to look at the severity of it, just like they look at the stage of cancer that you have. Are you stage 1 that was caught early and you've been completely free of cancer versus stage 4 cancer when it was first diagnosed? It's going to be the same when you're looking at what type of felony it is, right? There is a lot of subjectivity, I guess, that goes into this because, yes, they enter the data into a computer system and they can, come up with an algorithm that's going to kind of rate you. But there is a personal element to it as well as, okay, this felony or this person was convicted of shoplifting when they were 21 years old and they're now 44 years old and they're an upstanding member of the community. They have a wife, they have kids, that's going to be looked at, right? That's different than, I was 40 years old when I was stealing cigarettes. I mean, there's a difference, right?
Okay. So it sounds like it is just an overall thing. The insurance companies look at everything. If they ask you, have you ever been convicted of XYZ? There might be some if it's been a long time since you've been convicted, you might be able to get a policy, whereas you wouldn't before, or get better rates than you would have if it was, a year ago or something.
Correct.
Okay.
Yeah. And, there's also an opportunity for, a note section. I had a client recently who he said, hey, I have a history of a blood clot, but it was from a sports injury. Right. So that's different than I had a blood clot just because that's my overall health. Right. Versus I had a break in my ankle that created a blood clot. And that's why I had, so adding extenuating circumstances into it, explaining it, making sure that the underwriter sees the cause of the blood clot, not just the blood clot. Right. So depending upon what the situation is, God forbid I was, maybe a woman is convicted of assault, but the extenuating circumstances is that she was in an abusive relationship, right? And this was her fighting back. And yes, she was convicted, but you can also see a history of her being hospitalized or for being beaten up or a history of restraining orders or whatever might be the case, right? If there's an extenuating circumstance there, we want to make sure that the underwriter looks deep enough to see it.
So that's why it would be important to talk to an actual person instead of doing this online. Actually, is it possible for somebody to just go online and do this?
Yes.
on
So
everything.
you can't turn on talk radio without hearing, a different insurance company advertising their webpage, like Select Quote. That's the one I hear all the time. And people say to me, "Oh, Cortney, but you quoted me $28 a month and Select Quote says it's only 22." I'm like, "Yeah, well, Select Quote is quoting you the exact same companies I am. But the reason they say that, I'm just going to make up, principal is $22 a month, and I'm saying principal is $28 a month, is I know that you're not going to get the preferred rating because while you're in great shape, you don't have a perfect BMI, right? So
Mhm.
you're a little overweight. You're not too overweight, but they're going to hold you back a little bit. They're not going to give you that highest rating. Whereas when you go online, they always quote you the highest rating, the cheapest rating, right? So it's kind of hard to compare apples and oranges, but all the same companies that are available online are available through me.
Mhm. Okay.
So I always kind of like the shop local, go to an agent in your community, or at least someone you can talk to online or over the phone or Zoom with, so that they get to know you and your situation and they can help you utilize your policy to the best of its ability.
Okay. Okay. I do want to ask a few more questions about criminal convictions, but before we go on to that, I did want to say that I didn't say it in the beginning because I was mostly asking Cortney questions. But anything that we talk about with the law here, this webinar is not intended as legal advice. It's just intended for informational purposes. So if anybody watching this has any questions about your particular situation, you can contact an attorney, or me or Cortney or anybody dealing with life insurance directly to ask them specifically. Because as Cortney, I think, has made clear, at least to me, it's an overall picture, and you want the person that you're talking about this with to know everything that's going on in your situation. Would you agree?
I agree. Yes.
Yeah. So don't just assume that anything that we say here would apply to you, but it might cause you to call somebody and ask specific questions, which I think probably would you would encourage people to do.
Mhm.
Probably more so if they don't have a policy, and that's actually something that I wanted to get to. If somebody has a policy and then gets a conviction, well, I'm focusing on convictions, but let's say they have a policy already in place and they either get a conviction that would have been a problem before having a policy, or a medical condition, anything that would pose a problem. If they already have a policy, are they okay, or are their
Mhm.
rates going to change? Okay.
No. So once you have a policy, you're in. So term policies is kind of what most people are familiar with, right? Um, people will say, "I have a 20-year term policy." Actually, in that 20th year, it doesn't end; it just becomes adjustable. But that is a policy where they levelize your premium for 20 years. When you have that, during that time, nothing changes. If you get cancer, you have reckless driving, you're convicted, whatever, you have that policy, it's in force. Now, come the 20th year, they're going to adjust that yearly just based off of the cost of insurance going up, right? So each year after that, it will continue. Most policies until you're 90. But like I said, every company's slightly different. But term policies usually last until you're 90. Permanent policies um, go throughout the course of your life, right? They never expire and their rates never change. They stay the same. So your whole life policy isn't going to go away just because you've committed murder, or you have a reckless driving charge, or anything. Your policy is your policy. I always tell people when they're looking at life insurance, you're always one appointment or one accident away from increasing your cost or decreasing your insurability. People will say, "Well, I want to go get my physical and everything, and then I'll apply for life insurance." I'm like, "No, get the life insurance before you do the physical. What if they find something? Don't do it the other way around."
Yeah.
because once you have the policy, it's yours. It's in force. The only thing that can change your policy is if you have committed fraud in the application or the obtaining of that policy.
So if somebody is not honest on the policy and commits fraud and gets the policy, and the company finds out, then what happens to that person that did that?
So maybe I'll use tobacco. Maybe you say, I have never used tobacco, right? And you get a policy, and 4 months later you die of lung cancer.
Mm-hmm.
Okay. Or probably take longer than 4 months, but 4 years later. And they look back and they're like, well, hey, he never smoked, but they see in your medical records that you smoked a pack a day. They're going to say that was fraud. So what they will do in that case is they won't cancel the policy, but they would re-rate the policy. They would say, okay, well, let's go back and give him smoker rates instead of non-smoker rates, and then subtract the amount of the payments that you should have paid from the benefit. If it's something more fraudulent, you specifically say, you answer the question that, no, I don't race motorcycles, and you die a week later from a motorcycle accident that was obviously in a race, and the insurance company can prove that you fraudulently checked no on that application, then they can give you back the money that you paid, but they cannot pay out the policy.
Oh, wow. Okay. So I had an order of specific questions I wanted to ask, but I'm kind of going off the order based on things that you're saying, because this is interesting. And I have looked into life insurance before, but I'm learning so much, and just have some questions based on what you're saying. So if you're not honest on the application, and then they find out later, after you die, they could change the rates, and so they could change your rates, and they could deduct what you should have been paying from what they're paying out. Is it possible that they will change the coverage that they are going to give your beneficiaries based on that fraud?
They would either subtract payments that you should have paid, or they will completely eliminate the policy altogether and refund premiums. But they can't say, okay, it's $1 million policy, we would have only given you 500,000.
Okay.
It has to be premium based. Okay,
so it's one or the other. They either deduct the payments that you should have been making, or they cancel it. They don't pay out. They refund what you paid.
And refund what you paid.
Okay. So back to criminal charges. Are there?
I know that you have to prove fraud in order to do that.
Okay. Do they look into that before they pay out on a policy, or could they ever come back later and try to get their money back that they paid?
Oh, that's a good question. I think once they pay it, they've paid it.
Okay.
But that I'm not entirely sure on. I've never been asked that question. I would have to look.
Do you ever come into the picture when there's a dispute about the life insurance? Do you ever see that on your end?
Knock on wood, I have never had any of those issues. Okay. I always tell my clients, that honesty is the best policy, because they're going to find out, they pull your medical records. So, somebody says, well, I don't want to say that I smoked because I quit when I was 18. It's like, okay, but if you've told your doctor that, it's probably in your medical records. Mm-hmm. And then they're going to see that smoked as a teenager. All right, well, tell me that, because the insurance company is probably not going to care that you're now 40 something and you quit smoking when you were 18, mm-hmm. And that you only smoked for 2 years. They're probably not going to care too much about that. But if they see that you've lied on your application, they're going to start digging a little deeper, and they're going to start wondering what else you've lied about or what you're not. So, I've had clients who've just been flat out declined because they've lied on an application. So the company doesn't want to deal with that, Mm-hmm. So in that instance, I've redone the application with the different company and made sure that the client disclosed what it is that was discussed. But honesty is always the best policy because it will come back at you in some form. They pull prescription histories. So if you say, no, I've never had a history of depression or suicidal thoughts, and that comes up as that you've taken antidepressant medications for the last 10 years, they're going to be like, okay, well, why hasn't he told me this?
Mm-hmm.
I can give a specific example for myself. I years ago applied for life insurance. I take metformin for polycystic ovary syndrome. I am not diabetic. I've never had bad blood sugars, nothing. But metformin is one of the most common diabetic drugs.
Mm-hmm.
But I use it for an off-label purpose. And I've used it ever since I was trying to have kids when I was 22 years old. So when I applied for life insurance, they originally came back to me and said, what endocrinologist do you see for diabetes? And I'm like, I'm not diabetic. So I had to learn that, okay, that's a diabetic drug. I use it off label. So now I know as an agent, I ask my clients, if you take a medication that is used for something that it's not intended to be used for, make sure you note that in your medical interview so that we know, okay, this is taken for something completely different than diabetes. Because while the polycystic ovaries won't affect me in underwriting near as much as diabetes would. Right?
Okay.
So you want to kind of be careful and make sure that you give all of that information.
Okay. So in terms of crimes, I know you mentioned that the severity of the crime, felony versus misdemeanor, reckless driving versus speeding makes a difference. But is there any particular type of crime that is viewed by insurance companies as more risky? For example, assault or crimes involving alcohol like DUI or drug possession? Or is there anything that is viewed as more?
I would say use your common sense, right? If it's a crime that is connected with something that would increase your risk of death, they're going to look at it more than something that would not increase your risk of death. But overall, just having a felony is going to be an issue, right? But yes, if it's something that is, theft, and you stole a pack of batteries versus armed robbery is going to, yes, those are different things, right? It's a different severity. So just kind of use your common sense in that, right?
Okay. So you did say that all the insurance companies generally look at the same things, but if I understood you correctly, their individual applications are a little bit different. Like one insurance company might ask about 5 years back. One company might say felony within the past 5 years, but one company might say felony ever. Is that correct?
So most companies ask for felonies ever.
Okay.
But your moving violations, some might ask for 3 years, some might ask for 5 years. In medical history, some questions are standard. Have you ever? So your more common question or not common diseases, but your bigger diseases are going to be ever. Have you ever been diagnosed with HIV or AIDS? But some of the other questions might be in the last 5 years, have you had an MRI? Not have you ever had an MRI, right? Or they'll also ask if you have been recommended to have tests or procedures that you haven't done. If you, for example, I had a client that his primary doctor recommended he have a sleep study, and never did the sleep study. Well, the insurance company came up and said, we want the results of the sleep study before we will continue underwriting. We want to know, is there a problem there? Or if there's a problem, that you're treating it, right? If you do have sleep apnea and you get a CPAP, then okay, fine. But if there's a problem there and we're not addressing it, they're going to say, well, then we're not going to issue the life insurance, or we're going to decline the application until you take this next step. And it would be the same kind of thing, like, somebody has been charged but not convicted. They might suspend the application to find out what the situation is.
I was going to ask about that. So say you put in your application, no foreseeable issues, but then you get a traffic ticket, or you pick up a criminal charge, or you're convicted. You've already put in the application. Do you need to change it? Or are they going to find out? Is it fraudulent? Do you need to tell them?
You only have to answer what is asked on the date that it is asked.
Okay.
Okay. So, for example, the client that I had that was declined because she was traveling to Iran.
Mm-hmm.
When she came back from Iran, we put in the application, and it says, have in the last, I forget the time frame, maybe 5 years or 2 years, have you traveled outside of the United States or Canada? Answer was yes. I went to Iran. I went to visit my mother who was very ill. I was there for a week, blah, blah, blah. The next question is, do you have plans to travel? Well, the client's sitting there thinking, well, I might go back, depends on how my mother is. Well, do you have plane tickets? No, then you don't have plans to travel.
Mm-hmm.
Right? So then she could check no. Now, if in the course of the next couple of weeks, her mom takes a turn for the worse and she hops on a plane and goes over there, she did not lie, right? She had no plans. She was not going back.
Mm-hmm.
Didn't have plane tickets. She was okay. Now, if they come back and say, has anything changed during this time? Then you have to say, yes, I traveled to Iran again, or yes, I have tickets to leave tomorrow, right? So if they ask, you need to answer.
Okay.
But usually once they ask you, until the policy is issued, there's not too many additional questions, right? Mm-hmm. But if, say, a policy is issued or offered, you only have a certain number of days, like 90 days, to sign the policy and take the policy before they ask those questions again.
Oh, okay.
And then you would have to sign and say, no, nothing has changed.
Oh, so it's kind of like when you're applying for a mortgage, right? You have a certain amount of time. Well, I'm not going to claim to be an expert on that, but you have a certain amount of time to get that paperwork going. And, if you don't, they're going to look back at your credit again because things could have changed. So is it okay?
It's kind of the same thing. Once they say, okay, well, we've approved your policy. If you don't take that policy within a certain amount of time, they're going to say, okay, we need to ask you these again.
Okay.
Or you need to verify that you have not seen any additional doctors. You've not started smoking. You aren't suddenly rock climbing, anything like that.
Okay. Oh gosh, there was so much information today. I had a couple more questions I think I wanted to ask. One thing that I did want to ask, you mentioned having, for example, having some sort of medical issue and getting treatment. The insurance company wanted to make sure the person was, either getting treatment for whatever it was, or, just basically confirm if the person had an issue or not, because the primary care doctor suggested that person pursue that sleep study, right? Right. So if a person is taking care of a problem, I guess what's the best way to articulate this? If a person has a potential problem medically and is not taking care of it, is that viewed worse than if they are in treatment?
Of course. Okay. If you have somebody who's been diagnosed as a type 2 diabetic and is not taking the medication prescribed, I'm going to have a hard time getting them insured, But if they're taking the medication prescribed and they're doing well and their A1C is maintaining or improving, then we're in a different situation. But yes, if you're not rectifying the situation, it's
Okay.
more detrimental.
Okay, so even if you do have a medical issue, it's better that you are taking care of it or trying to take care of it than just ignoring it, I guess. Like
Yeah.
like you said earlier. Okay, so they really do look at everything. I mean, they ask you if you're taking your medication as prescribed, or they look in your medical
Well,
records.
your prescription history, so they know if you're getting it filled.
Okay, so they really do look at everything. So you're not going to hide anything from them, right?
Yeah, they know what they're doing for sure. Yeah.
Okay.
And, I kind of touched on this earlier, Jean, but kind of before this ends, I really want to highlight, we talked about the importance of having life insurance to protect that income in the beginning, but really how people are utilizing life insurance today is much different than a generation ago. And that's mainly because of the ability to use life insurance now while you're still alive. So you can use your permanent life insurance to pay your long-term care costs, which here in Northern Virginia, you're looking at a minimum of $10,000 a month for skilled care.
Wow.
So that can really devastate a person's financial plan or a couple's stability in the future should one person need long-term care. So getting that term policy when you're younger locks in your insurability, because those term policies can be converted into permanent policies that can be used for things like paying for your long-term care. It can be used as a buffer asset. Like I said, when we have times like this, when the market drops 30% in a month, that can be detrimental to the longevity of your 401k savings. So having a different asset class that you can pull money from in retirement is vitally important. So I always want to tell my younger people, get insurance while you can, before you have a conviction or a speeding ticket or you get a diagnosis. Get it while you can when you're younger. Lock in your ability to have that insurance when you're older. Lock in your insurability. And that's by getting a term policy that's convertible and making sure you're working with an advisor who will remind you to convert that before that convertibility option expires.
Okay. So it sounds like a person could take money out of what they would have been paid to use for long-term care, because if they need long-term care, they're clearly still alive. So they can get out of the life insurance.
It's an acceleration of the benefit. So it takes or say you have $100,000. It's going to advance that $100,000 to you while you're still alive over a course of a couple of years. Depending upon how we set it up, that's really getting into the weeds, but it advances you that money to use for your long-term care expenses while you are still alive. And if you don't use it, then it's there as a death benefit. So it's not like you're throwing money out the window, and if you don't use it, you lose it. It's going to be one of two things. It's going to be your long-term care, or it's going to be a death benefit for your wife or your children or your grandchildren or your favorite charity, whatever the case may be. Another aspect is when you take that money out of your life insurance policy, that money comes out income tax free. So if you had to pull out $10,000 a month from your life insurance policy, you're not paying taxes on that. Whereas if you take $10,000 a month out of your retirement account that was tax deferred retirement, like all of our 401ks are, you're going to pay taxes on that $10,000. So that $10,000 is now only going to be $8,000 after taxes if you're in a 20% tax bracket. So it's very important to make sure you understand the benefits that it can offer down the road. And life insurance, term insurance when you're younger is less than a cost of a Friday night out at a bar. Now, right now, we would all really, really like to go out and spend a Friday night at a bar, right? But prior to March 11th, We all probably could have given up one Friday night a month in order to have the life insurance, or left early one Friday evening, right? 22 bucks a month for $1 million in coverage is good, you know. So making sure that you make those smart decisions when you're starting out is important. But even for my clients that are in their 30s and 40s, yes, it's going to be more expensive. You're older, but the benefits that you're going to reap further down the line in your overall financial plan are very important. And right now, because of the coronavirus, a lot of the insurance companies are waiving the medical exam. So right now you can get your insurance with just desktop underwriting. So they're still pulling all those records, but they're not actually drawing your blood or asking for your saliva. So it streamlines the process. Applications get approved much faster. And, we're able to use this time where we have extra time on our hands to do those things that kind of are always like, yeah, I know I should do that. I just don't have time. Well, we all have that time. We're not commuting now. So use that time to pick up the phone, call an agent like myself. And I highly recommend you call an independent agent. If you're not calling me, call an independent agent, not one that only does New York Life or only does Mass Mutual or only does State Farm. Call someone who can shop multiple companies.
Okay. That's really good advice. And that's something that I didn't really think about before. And I think a lot of people who are watching this or will be watching later will appreciate all of that information. I did have one question, specific question before we wrap things up. If anyone who is watching this now or later already has convictions for something that would be a problem, or already has, a medical issue that might be a problem, would you suggest that they still talk to you anyway and see if there's anything that you can do for them?
Yes. Like I said earlier, I have underlying medical conditions, right? I can still get insurance, right? It's not as cheap as it would have been if I didn't have those underlying medical conditions, but I'm still able to get a policy that I can use for my long-term care in the future, because the chances that I'm going to need long-term care are greater than my husband's because of my medical underlying conditions. So yes, always ask, always look for it. I'll be perfectly honest. I will try to find you coverage. I will lift all the stones and look to see, what we can get you. But something is always better than nothing.
Mm-hmm.
Especially if you're trying to either build your financial house or rebuild your financial house. It's a foundational stone. It's a cornerstone you need to have.
Okay. Before we wrap things up, I am going to ask Cortney to address anything else she thinks that we should know. But if anybody has any questions, you can start typing them into the comments. So while I wait for those, I'll just turn it over to Cortney, because we covered a lot of ground and there's still a lot of questions floating around in my head. But is there anything else you think is important for people to know? And before you answer that, I do want to say to people, and ask Cortney, actually, all the information that you gave us today, does that apply regardless of whether, we're still in this pandemic or not, aside from the waiving the medical conditions? All this advice is regardless of any time?
Yeah, no, there has not really been any changes to underwriting or anything during the pandemic, except for them loosening the requirements for medical exams. And that does, a lot of companies will only go up to a certain dollar amount. Maybe they'll only do $1 million or they'll only do $500,000 without the medical exam. But it's pretty much any time those are in line. And as you were saying, just kind of in conclusion, I think I kind of already summed it up, but like I said, something is better than nothing. Your life insurance is a key component to building your financial future, building your financial house. It is part of every financial plan that's out there. and having your life insurance and having just an overall plan is very important. And if you have a financial plan or you don't have a financial plan, call me. I can see if I can help you. I do have some electronic plans out there for clients that are extremely affordable. But I deal with a pretty broad spectrum of clients. You know, I have clients who are just starting out or who are rebuilding to clients that are high net worth. And just being able to, you know, work with them where they're at is very important to me. And that's why I state work with an independent agent, so that they can shop multiple places for you and they're not captive to one company. And working on the financial side, work with a fiduciary, work with someone like myself, like you, that is required to work in the client's best interest.
Mm-hmm. Now, can you work with clients all across the country?
Yes. So right now I have clients from Illinois to Jersey, Massachusetts to Kentucky. But it only takes me 24 hours usually to get my license transferred into another state.
Oh, okay. So somebody has to be licensed in every state, like with the bar for law.
Correct.
Okay.
But it's a lot easier for me to be licensed in another state than it is for you all. The states the exam and the licensing is the same for all the states. So it's pretty easy to go back and forth between them.
Okay. So Cortney, if somebody wants to get in touch with you, how would they do that?
You can visit my website, cloverleafwealth.com, on Facebook, Cortney Heykoop at Clover Leaf Wealth Strategies. You can email me or call me. I can put my contact information in the comment section of this live stream as well.
Okay. And for anybody that's watching this now or later, this video will be replayed. So if anybody ever does have any questions based on what you see in here, reach out to either one of us. Like Cortney said, she'll put her information in the comments. I'll have my information as well. So, you know, don't be afraid to reach out just because you missed the live stream. So I guess on that note, Cortney, is there anything else you want to say before we get off?
No, I think we covered a lot. Hopefully we've answered some questions, and I'd be glad to help anybody answer any, you know, specific questions and how it pertains to them.
Okay. All right. Well, Cortney, thank you very much for joining us. Again, this is Cortney Heykoop with Clover Leaf Wealth Strategies and Jean Humbrecht with Humbrecht Law. This video today was talking about how criminal and traffic convictions can affect life insurance, but we also talked about a lot of issues with life insurance. If you're, you know, catching this later, definitely go back and watch the video because we covered a lot. So, Cortney, again, thank you for joining me today.
Thank you for having me, Jean.
Mm-hmm. And I will see everybody on the next webinar. Have a good day.
Thank you. Bye-bye.